three Republican appointees, none of them appointed by President Trump. The outcome of this case really could have huge consequences. Potentially, it could invalidate Trump's use of the tariffs, could undermine the trade deal that he's procured so far, and could maybe mean the return of tariffs that have been collected. But it's for the Trump administration and those that are supporting his tariff policy say not.
Ray, can you hear me?
Nick, I can hear you loud and clear, my friend. Can you hear me?
Yes, we'll get started here in about 2 or 3 minutes. We're gonna let everyone hop in here. All right, hold on a sec. Thanks for hopping on, by the way, brother. Appreciate
of course. Of course. We got a lot going on, right?
it. Sure do.
Absolutely.
All right, that works better. Okay. We'll get started here in a minute. Real quick, for everyone on the call right now that's here currently, there should be a bunch more people hopping in as we go. You guys are going to have questions, most likely, as we kind of start. I ask that you all hold them to the end, just out of respect for Ray and time. If you want, it would even be better if you put your questions inside of the chat for me, and I can start kind of going through them as we go. I don't want to take up too much time of everybody. We're going to do this for about an hour. We can stay on afterwards and let Ray go, but about an hour, 45 minutes to an hour, we'll kind of talk some high level stuff with my good friend Ray. So just so all of you know, this is my good friend Ray Moreland, also business partner. Ray is first of all, Ray's awesome. Me and Ray do a lot of stuff together. We travel together a lot, play a lot of golf together. One of my good friends, definitely one of my good friends. So I'm very grateful for him to hop on and take his time to talk to all of you today. So to give you a quick background, and I'll let Ray give you his background fully. Ray had 20 plus years on Wall Street as an institutional bond individual, trader, whatever you want to call it, and he'll talk to you about that. Ray has a private equity firm called Blue Harbor that does industrial tilt wall as well as marine boat storage. A lot of you know about that deal that I have over in Dubai that we've talked a little bit on. That is with Ray, so we'll talk about that as well. What else, Ray? Ray's an investor.
Yeah, investor.
He invests in a lot of deals. He raises capital himself. So everything that you all do here, Ray does as well. So Ray, I would love for you just to give a 2 or 3 minute background, dude, of yourself.
Of course.
About private equity, how the transition happened to from being institutional where you were for so long to private equity, raising capital, all that, and we'll kind of get into some questions.
Yeah, no, I appreciate it, Nick. I appreciate being on, and thanks, guys, for having me. Yeah, I've been institutional fixed income for about 25 years. I started as a financial consultant at Merrill Lynch back in '97, cold calling 220 dials a day, which sucked, but they just want to see that you can get through it, right? So you learn rejection and let things kind of run off you. And then I got an MBA, got hired, beat out 5,700 people for one spot at B of A in their associates program in 2000, I think it was. And then you go through a rotation. This is not unlike JP Morgan, Goldman, old Bear Stearns, you name it. So they all go through rotations. They're defined by MBA versus undergrad, right? So analyst program. So so did that. I've covered some of the biggest private equity and institutions in the world. I've covered Canada Public Pension, Ontario Teachers, Citadel, the big hedge fund, and my primary responsibility is a quarterback, basically. So I'm matching up a trader on the sell side, which would be where I worked, whether it be B of A or FTN or so forth, and matching up with the institutions. So let's say I'm calling Allstate or NML or something like that. I try to figure out what they're doing on a daily basis. So whether they're wanting to buy 10 million GMAC, 10 years, my trader, maybe he's not long them, he's short them. So anyway, long story short, I'm simply creating relationships, showing empathy, which is one of the biggest lessons I learned in the very beginning. I was trained by DLJ, old Goldman guys, and all that stuff. Shearson Lehman, all that is showing empathy to accounts, right? So, if I have an account that's upset, I'm the quarterback. I take the brunt of it, and I relay to a trader because a lot of times they're AAA like me, but even more so, and they don't take rejection and things very lightly sometimes. So it's simply matching things up, trying to make money any way you can, but helping the team out. And that's what it is. So I was a salesman in commercial in CMBS, RMBS, high yield, CLOs, you name it, anything in fixed income, I did it. And a lot of times, if I was not trading or reaching out to accounts, and I didn't feel like there was a flow with them or producing with them, I go out and see them. And I think that's extremely important, right, Nick? So we've been to Dubai several times. If you're not doing business with someone, go see them. Go take them out, go figure out what they're doing and listen to them. Don't just talk. Listen to them. And I think that's a big key that I learned early on is, I had that nervous energy. I had that nervous talking, right? Like dead silence. If you get dead silence on a phone, most of the time people just want to start talking because they have that nervous energy.
Hmm.
It's hard. It takes time. Just listen to what they have to say. And if you're going to make a call, no matter if you're really good friends with the CIO or the trader, you think you're buddy with them all the time. Every time you talk to them, it's still a sales call. Like you're always selling, no matter what you do in any part of life. I tell our kids that all the time. They don't always listen, but they're teenagers that think they know everything. But listen to what they have to say and show empathy and anyway, so I'll kind of put it in a bow and talk to you a little bit about how I started in the private equity. So been doing that for 20 some years. I had a sponsor, a commercial real estate guy, reach out to me when we lived in Manhattan Beach, California. And he's like, "Do you know any funds that have equity?" I'm like, "Yeah, I have 30 different accounts that have over 10 billion AUM." So anyway, we started talking. I started introducing them to him, which is not easy because they trust you. They don't trust this guy who's coming off the street, right? So that's how I started. I started helping him raise funds for MOB, which is medical office buildings, out in Las Vegas and Seattle and so forth. And I'm like, I kind of like this. This is interesting, right? So I bought and sold properties, resi, right, real estate, but I've never really got into commercial real estate. It's kind of cool. So anyway, we started talking, and I started introducing him, and it kind of one thing led to another, and then we moved to Austin, Texas, and I said, you know what, I need some income on the side. Let's get into commercial real estate. So I did about a year and a half of due diligence in Austin. Looking at industrial tilt wall, which I didn't even know what industrial tilt wall was, right? Simply concrete, basically, in a nutshell. And these were, 10 to 12,000 square feet, the new construction. So then I started understanding the market. What are lease rates? Is the demand there? And that's a big thing as I segue to private equity, is that's how I first started into the world of private equity, which is simply basically taking private funds to and deploying them in some sort of asset that you see fit that's going to make you money, right? There's different types of private equity. You've been involved in roll up. I'm more just kind of real estate, bringing funds together and deploying, right? Some of it's my own money, a lot of it's other people's money. But yeah, so then I started with the commercial real estate in Austin, and then we bought several properties there. We one times cash on several of the properties in industrial. I love that space. And so I came, we moved to Florida because I was still institutional fixed income. Keep in mind, I'm doing this on the side, and you have to disclaim it, right, with all the disclaimers and everything out there. So came to Florida. and then I started doing high-end luxury resi, ground up with developer buddies. So started doing that. Those are generally 15 to 18-month builds. And I think we were easily 0.6 to 0.8 times cash on cash within 12 to 15, 16 months. So then you got the high-end luxury resi, you got the commercial real estate, and then I started Blue Harbor, and Blue Harbor is an alt, as you well know, is an alt series niche in the fully automated marina boat storage facility space. So that's another thing is everybody pitches everybody on multifamily, right? Multifamily this, multifamily that. Okay, great. It's not really it's not my lane, right? So I know my lane. It's very focused on one product right now, and that's 70,000 square feet, 80,000 square feet, and 70 feet high, and they're fully automated marina boat storage facilities. The first one in the world was built in Fort Myers Beach by our partner, ASAR, and we're raising money for it. We're raising debt financing for it on a large scale, not a small scale, because these generally are between 60 to $200 million to build if you put the mixed use components. So anyway, that's how. I don't mean to talk your ear off, but that's kind of my background. And I would say kind of going backwards a little bit, if someone isn't getting something done with a client or prospective client, go see them, go take them out. You don't have to have cocktails all the time, although I do sometimes. But
Yes, you
but
do.
go see them and just figure out what they're trying to do and listen to them. And anytime you talk to someone, it's always a sales call. I mean, buddies all the time. I still talk to them on the buy side. If and at some point we may open the U.S. funds, but I don't think we're going to need to at this point. But anyway,
All right,
that's
so let's get in, Ray. Let me cut you there. Let me start
yes.
asking some questions because
I know
the
I talk a
folks.
lot.
That's okay. That's what I love about you. Let's the folks on this call, as you know, are ladies and gentlemen that are raising capital for their current deals. They're learning how to get structured. They're learning how to
Yeah,
be investable to an actual real investor.
yeah,
And a lot of them have raised capital before or through the
sure,
program already. We have people raising millions and millions of dollars. And so I
sure,
want to know from your point of view, right? A couple questions that I see.
sure.
You've invested in a lot of deals yourself, and obviously you've raised capital for deals right now.
Yeah.
When you're looking at a deal, if someone were to bring you a deal,
Mhm.
what's the first thing that you want to understand from that deal? And also, how important is the founder and operator to your decision making? Like, what kind of signals are you looking for from the founder and from how they're structured?
Yeah, I mean, I don't want, first of all, I don't want someone to come in and try to sell me, right? I mean, I'm a salesman, so I get it. I look at demand, supply, demand, right? So I look at an area, I look at demographics. I first say, okay, well, I had a call today with actually Bradford County, and in between Jacksonville and in between Gainesville, and they're looking. Their economic department called me and said, "Hey, we need to start getting more in industry here." And I said, what about supply demand? Like, if we build 250,000 square feet industrial tilt walls and tranche them up, is it going to be able to hold? Is that area going to be able to hold? So, and I'm not going to be sitting on warehouses forever. So I look first at really for what's the business model? What's the plan? Like, do you have a plan, or are you just trying to get money out of me? Right? I mean, everybody wants money. Everybody wants equity, right? So, do you have a plan? What's the supply demand from my standpoint? Look at it. Are there a lot of is there a lot of other competition in the area? Are your numbers right? Because I'm going to go through them myself, and I will tell you most of the time, you guys probably know this. Most of the time, a lot of these brokers, their numbers are they're just not base case numbers, right? So when I base case, I was in bonds, I was in fixed income, I stressed everything out to like up 300, down 300. So I want to know the worst case scenario, and then I base my numbers off that worst case scenario, and then I build models around it. iBanking guys do this all the time.
So, Ray, can I interrupt you right there? Because
Yes.
I think that's an important point, right? When people here are putting together their financials or pro formas to
Yeah.
go out and raise capital, a lot of people make it look as if this is going to be the best deal ever. This is the best. They don't say it, but they put their numbers as the best case
Yeah.
scenario ever if
Yeah.
everything in the world went right for them, right?
Right.
So you're saying that base casing it, keeping it very realistic is the way that it needs to be done and shown to a real investor, correct?
Yeah, yeah. If your numbers are very solid at a very low base case, then chances are it's going to be probably a pretty good deal. But everybody likes to price everything to perfection, and the world doesn't work that way, as we all know, right? You can go through now there is some price inelasticity with demand and with areas of wealth, right? I.e., if homes cost 10 to 11, 12 million, your buyer chances are is going to pay cash, so they're not as sensitive to interest rates, so price inelasticity of interest rates. So they're not going to be as worried about interest rates, but they may be worried about other things. So yeah, base it down, and people will respect you for that. I mean, honestly, if I'm looking at a pitch deck or I'm looking at a deal and I see those are priced to perfection, well, there's more going to go wrong than there's going to go right from that model, right? So, and if it's my money and someone else's money involved with it, I have a responsibility and fiduciary
Right.
responsibility to them, right?
Absolutely. Absolutely. Okay. All right. Taking that and leading it into this question that I had written down. Um, Obviously, you've raised tons of money yourself for deals, for other people's deals. You've also deployed a lot of capital, whether it's your own or whether it's others. What's one thing that you kind of wish founders understood better about actual investors? Like what could they understand better about someone like yourself or real investors that are deploying real capital that they just don't get? We talk a lot, just so you know, in Capital Unlocked in our program, we talk a lot about the mental side of not only us raising, but also an investor and what they're looking at, the psychology, the mental, and
Yeah.
what they're thinking. So if you want to kind of base it on that, that'd be great.
Yeah, I think from a ground level, right? I mean, you got founders that their really job is to be 30,000 feet, kind of making sure everything gets deployed, this, that, making sure legal gets, and we're going through that right now, right? So making sure legal gets buttoned up and so forth. But a lot of times founders aren't really on the ground level understanding, is there really demand in this area? Are these numbers accurate? Is my operator, my staff, right? Are they doing what they need to be doing? Are they asking the right questions, right? So are they getting out and actually hitting the pavement? I'm not talking about cold calling. I'm talking about, are they hitting the paper to their vendors, to their subcontractors, to whomever they're dealing with? Are they really seeing what people and what their employees are doing on the ground level, and how can they better themselves, right? Because we're not perfect people. We all make mistakes. I learn more from my mistakes, my failures, than I do from anything else. So, and
Right.
I tell our kids that all the time, right? I mean, you learn more from screwing up than than you do from anything else.
Love that.
So I would say get on the ground floor, right? Understand what your employees are doing, and ask the right questions, and actually have a solid communication with them on a daily basis. Not if it's not daily, then have it, have team calls all the time, and everybody should always be improving. I can improve all the time,
Absolutely.
I screw
So
up.
let me ask you a couple questions, Ray, just very specific on raising capital.
Yeah.
Um, and it's these are going to be a little more personal on your side, I guess. So, first off, how do you personally decide when someone's pitching you or when you see a deal? How do you
Mhm.
personally decide on when to actually say yes and move forward, whether it's deploying the capital or not, but just moving forward and actually just saying no, I'm good, and walk away from the deal? What's your decision factors and how fast are you making that
Yeah,
decision?
you first have to understand, does the deal make sense, right? Is it in the area that I want to be in? If I haven't seen that area before, okay, well, let's take the time to do it. No, no one should be saying yes right away, right? I mean, you've got to put the time and work into it. So, my spreadsheets and just everyone that goes through this kind of thing, they all do their proper due diligence. So, I would say, does it make sense, right? Is it a niche? I mean, everybody's pitching multifamily. How the hell do you compete with Blackstone? How do you compete with some of these other big operators? Not even Blackstone, but some of these other big operators that can take down, 50 to 100 million at a pop. Or there's it's such a crowded space that you have to kind of separate yourself. So is the product, is it going to separate itself? Is it an idea that, or a location, or does it have a mixed use component that is different than someone else, or a different product? So is it different, right? Does
Yeah.
it make sense? Does it, do you trust the person?
Yeah.
Have you done the research of the person that's
Yeah.
actually pitching you the product? I mean, you know,
So we
yeah,
talk about that a lot. That's number one for, obviously the
yeah.
deal has to look right. But as soon as the deal looks right, the first thing that every investor is looking at is they're investing in the individual, right?
Hmm.
Can they trust that person? Because trust actually is going to move the capital your way. So what built that trust for you? And Mike, real quick before you answer that, Ray, if you guys
Yeah.
have questions, throw them in the chat for me. I think that's a better way to doing this today. Just throw them in the chat, and I'll ask the questions as they come up. But just throw them in the chat if you have questions. Um, how do people build that trust with you? Like what makes you feel like you can trust somebody from the start or not trust somebody?
Takes a little bit, I would say. Not, the first, I think you get an idea if people are sincere, right? I'm a Midwest guy, so I think I've dealt with huge institutions and everybody's professional and blah, 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 right? You go in board meetings, all that. So I just think you kind of use your nose a little bit. It's kind of a smell test, but you do your research on them, and, people understand. We're all smart people, right? I mean, you guys are all smart. So I think people can understand if they're being pitched, like really being pitched something,
Hmm.
right? And if it makes sense. I mean, simply put, right? I mean, if someone tells you here in Boca Raton, oh, I can ground up this multifamily, for like, $50 a square foot or whatever. If the numbers are just outrageous, they probably are, and something doesn't make sense. So,
Yeah.
um, I think people are a pretty good judge of character. And it's just a smell test kind of thing.
Yeah, we talked
In the
about
very
that
beginning.
literally yesterday on our call we had we have a couple calls a week, and yesterday on the call one of the things we went over was you, like you said, it not selling. You don't have to feel like you have to sell your deal. If you feel like you have to sell
Oh,
your deal to an investor, they smell that out immediately, and
yeah.
they're gonna walk away because you can't sell a salesman, and everyone here is a
Yeah, it's
salesman,
true.
right? Everybody you're
It's so
dealing with,
true.
if they
So
have
true.
money, they're good salesmen or saleswomen. So
It's so true.
we talk about that a lot. Is not coming across that way for sure. Um,
And just be a
Great.
just be a nice person. Like, I mean, honestly, be a real nice, be a real person, right? I mean, like you said, not trying to sell. And if everybody's selling the same thing, then where's the value add on that,
Right.
right? I mean, we'll get young iBankers to go plow through all that stuff and then come back to me. You know what I'm saying? So it's, yeah, it's a smell test for a lot.
Yeah. By the way, Ray, I like your shirt. Where'd you get that from?
Gee, no.
All right. Um, I just saw it. So look, you've traded billions and billions of dollars in bonds and investments and things like that. What lessons could you kind of give people possibly that you had from Wall Street that still apply today when evaluating a private deal?
Yeah, don't BS people. Show empathy. If they have issues on their own, if it's a distressed seller, if it's someone, don't just go in there. I would not just go in there and be like, all right, what are you going to sell it for? Right? Show empathy to them. Like, understand where they're coming from. Maybe there's a JV that you can figure out with this person, and maybe he'll sell it for less of a price than he originally
Mm,
had. Or maybe there's a different way to structure the deal where he can still maintain some ownership. So and that will work out for both of you. Maybe he's got the subs, he's got the contractors, he's got the experience. Maybe you don't. Maybe there's a JV. So yeah, I mean, just show empathy, and just be real, be truthful. I mean, it's common stuff, right? I think too many people are just trying to, because the deal making's been down over the past year and a half with the rate movement and so forth, and it's basically locked a lot of things out. People, I think, are so they're climbing on top of each other to try to get a deal, to try
Mm,
to close any deal, but they're not listening really to what the objectives are, what the goals are. And go see people, go travel, go see people, that you're asking for money for. Go see them, go figure out what they're doing, understand their business before you ask for, 10 million, 50 million, whatever the case may be, right?
yeah. Yeah. You know, that you said something earlier just before that I say a lot, and I think you've heard me say this, and probably all of you have as well. When it comes to deals, when it comes to business, um, I think people, greed gets in the way of everything, right?
Sure
And
does.
what I've learned is that a little bit of a lot equals a lot.
Yeah,
We've even been talking a lot about deals that we have right now, and hey, we might have to take a hit in certain areas
for sure.
for the greater good, for the greater
For
good for the
sure.
future, not just for this
Yeah.
one deal, right?
Yeah.
So a little bit of a lot becomes a lot, especially over a period of time. And
And
I
they're
think that,
lasting, and they can, I'm sorry, I didn't mean to
no,
interrupt,
please.
but they're lasting relationships. I mean, you can, believe it or not, you can build lasting relationships with people you're asking to kind of help partner with. I mean, there's a lot of good people out there. So yeah, I mean, there's a lot of opportunity, a lot of money to be made, but people just have to do it kind of the right way. And everybody's got their own way. My way could be different than
Yeah, absolutely.
everybody else's, right?
All right. So when raising capital or when going to try to raise capital, um, structure versus story, right? You have to have a great story, but you better have good structure too. Is there one more important than the other? Do they go hand in hand? What have you seen? I have my take on it that I'll give, but as far as story versus structure, what do you see that is more
Yeah,
important?
I think you want to have structure to tell the story, right? So if you think about the story, I'll give you an example: automated marina boat storage facility, which we're honed in on right now. Well, you've got to have the structure in place, and you have to have kind of the small team in place to and know and contractually button that up before you go pitch a big debt person or a private credit guy, or in our case more private credit. But so button everything up. If you know you're going to go pitch a big person, then I would make sure communicate and button up with your partner or partners beforehand, so you all feel good about what you're trying to do. What you don't want to have happen is you get in, and you're right at the deal, you get right in legal, and then you and your partners are looking at each other saying, "Oh, well, I'm getting this. Oh, I thought I was getting this." No, you don't want miscommunication
Right,
with your own team. So get that buttoned up, get that structure, along with the story, right? So I think and then you have legal take care of all the structure, and
right.
they don't take care of all of it, but I mean, you have an idea, but they'll help you through all that. So
Okay.
they go hand in hand. They really do.
Right. They do.
I
Yeah, we talk about story, how important story is, because story is going to
Yeah,
get the dialogue started to actually
for
get you
sure.
to the next meeting or to able to present the structure or whatnot. So, no, that's a good answer. I appreciate it. Guys, I see all your questions too. I'm going to get to them, keep putting them in. I have a few more for Ray as we go. But Ray, what do you think the difference is between someone that, is raising 100,000 or can only raise 100 or 200,000 versus someone that's raising 50 to 100 million? What's the difference in that person?
It may be if I mean, I almost think they go hand in hand, to be honest with you. I mean, I was raising money for a couple hundred grand, at one point, and I'm still the same person that I was
Mm,
before. So I think they really go hand in hand. The variables that change are that if you're looking at raising a couple hundred grand, you're probably going to individuals, high net worth guys, right?
right,
Very small family offices, maybe RIAs, but then you can't get into RIAs because you have to have agreements, and that's a whole different story. So it's more small retail investors that you're going to,
mm-hmm,
versus if you're raising 50 to 100 million, you're going to institutions and family offices, endowments. Good luck getting into those guys unless you have relationships. But it's just the sophistication, more of it. And you guys know this. The higher you go in the ask, the more sophisticated, the more CFAs, the more analysts these insurance
Oh, yeah.
companies have. I mean, I can go to KC Life, I can go to America Life, I can go to NML. They all have CFAs. They're all smarter than me. They all have their teams that actually crunch the numbers of what I give them. So it's just a level of sophistication, but it should be kind of the same mentality, the same person. You have a good story, have a structure in place, you show empathy, and you got that niche product, you know, that's kind of
So
where
here's the beautiful thing about raising capital that we talk about all the time and that I show people, right? Is whether you're raising 100,000 or whether you're raising 100 million or more, all the structural part, all the being investable part, being professional, understanding what people want is all the same. And that's
yeah,
what's beautiful about capital raising, right? Now, the way you approach them, maybe the way you're talking, the way you are putting your assets, your deck, and all that together might change a little bit for sure.
good.
But it's actually all the same, which is one of the most amazing things about
Yeah,
actually raising capital, right?
for
So,
sure, for sure.
um, hey, my buddy Tim has a question here. He says, can you clarify the difference between base case and worst case? He says, is the base case a more realistic scenario and the worst case is more of a stress test scenario, or are they the same?
Yeah, yeah. Base case is a stress test. It could be construed as a worst case, but then you're going out to what, zero, right? So a base case would be the lowest parameter or metrics that we would use in that scenario. So worst case is basically zero. But yeah, I mean they can kind of intertwine, right? So base case is the lowest threshold that we perceive the risk to be, right?
Right.
So in essence, it could be a worse. It depends on how you look at it. They're very similar
Okay. Hope
without
that
going to
answers your
zero.
question, Tim.
Yeah.
Doug had a question here, and I think this question he's putting it in a real estate term because he's a real estate guy.
Yeah.
But I think it can be for everyone here. He says credibility and transparency builds trust, which is what I talk about all the
Sure.
time. How can an experienced real estate investor or developer who's been successful for multiple employers, so basically he's been working for as an employee for multiple
Yeah.
development companies, and now he's going on his own. How
Sure.
can he build trust with potential investors without actually having the real track record under his own flag?
It's tough. It is tough without, without, so to speak, a portfolio, but you can do it. I mean, it's just, it's really kind of pounding the pavement, to be honest with you. You're going to get a lot of rejections. You are. I mean, and it's going to happen, but you tell the right story with the right, with the right mix of, hey, this makes sense. This is a product I have. This is an area I really like and no one else has it, it will sell itself.
Right.
So there will be a lot of rejections for sure. But you get the right story, get the right product, get the right demographics, get the right location, whatever. For the right person, you should be able to sell it. So
Yeah, one thing we talk about too when it comes to that, especially a lot of people on this call that are kind of new in certain sectors,
yeah,
if they are, is using borrowing credibility. So the people you can partner with people that have that credibility, that have had those things, especially in real estate or others, that
yeah,
you can borrow that credibility, which now becomes your credibility as well, which helps a
yeah.
lot.
Yeah,
Yeah,
and we all get rejected. I mean,
yeah,
everybody you get rejected in everything all the time.
absolutely.
And it's part of life, right? And it's part of, and you just realize that person's not the right fit for you, and you just move on,
Yeah.
right? But you'll find them eventually.
Let me ask you this. Someone just asked, how valuable is first to market to an investor? So being first to market, how valuable is that?
Yeah, I mean, it can be for sure. I mean, timing's everything. You've heard that. Kind of heard that the whole time. I think it can be. For instance, yeah, we're basically first to market on automated marina boat storage facilities, right?
Yep, we
Especially
are.
in the Middle East. So I think that does play a role. First to market in what? First to market in this specific multifamily or this specific office space or whatever. If it's again, it goes back to if it's a good story, if the numbers are right, if it makes sense, first to market 100% can work. If it's something that everyone has seen, that maybe the numbers a little bit iffy, then maybe it's not as important.
Right.
it really kind of depends on the situation. I think, in my opinion.
Right. All right, guys, keep throwing your questions in. Well, I'm going to do a little lightning round with you, Ray. I'm going to fire some questions at you real quick. You can
That's fine.
answer them quickly
That's fine.
or go deep in. It doesn't matter. It's up to you. All right. The best deal you've ever made.
Oh, ooh, 3.5 times cash on high-end luxury resi.
Love it. Most underrated skill in capital raising.
Patience and listening to who you're trying to get the money from, right?
That's a good one. Patience. That's a really
Hey,
good
I
answer.
have no, as you well know, I have no freaking patience. So,
So a good story. Ray and I talk every morning at 8 a.m. Literally, he calls me at 8 a.m. every morning.
yeah.
And 8 a.m. is like the worst time of the day for me because I'm either getting my kids to school or I'm going to the gym or something's happening at 8 a.m. every day for me. And I told Ray the other day, I said, Ray, we got to switch our time to 9. Can we just switch it to 9? He goes, absolutely, switch it to 9. Guess what time he calls me this morning? 8:15. He waited 15 more minutes, so we're getting there. We're
Yeah,
getting closer
I
to
gave you a little
9.
respect there, a little shout out, you know.
I
But
love
yeah,
it.
patience is a hard thing
Patience is
for a
hard.
lot of people because, like I said, it goes back to rejection too, and it goes back to things are out of your control. Like, and you guys probably all know this. When you're in a deal, legal takes forever sometimes.
Hmm.
And just other things, just as simple as like if you're grounding up, right? So then you have to wait, and you're grounding up on raw land. You don't have the entitlements. You don't have the water sewer. You don't have all that. So you're waiting for the county. You're waiting for this. You're waiting for this person. You got the birds and bunnies test coming out. You got the environmental impact surveys. So there's so many things that come about, and it can test anyone's patience,
Yeah,
I would say.
absolutely.
And keep
All right.
doing it. Keep
Yeah.
doing it. So
Keep pushing along.
keep
All right.
pushing.
What's one founder or investor that you admire?
When founder or investor that I admire, well, I mean, most people are going to say Buffett. I agree 100% with him. He kept it simple. He kept, he invested in companies that everyday Americans use, right? So there is a big use for that. I would say him. I would say some of the early on private equity, like Mark Rowan, some of the Blackstone guys. I think those guys are incredible what they did. I think the early pioneers of structured products from a Wall Street perspective back in the early 80s with derivatives and so forth. I think there's a lot. There's just a lot. I mean,
Yeah.
Buffett comes to mind for most people. And I won't get in politics on this. I won't. I'm going to try to avoid all of that. But The Art of the Deal is a damn good book.
Yeah.
So, you
Yeah,
know,
it is.
I read I was interning in undergrad at Merrill Lynch, 626 office, Board of Trade in Chicago, and my mentor was a big broker, big time guy, and he said to me, Ray, I'll give you $20, go buy a book on selling. So I did. I looked at the Barnes and Noble there by the Board of Trade, and I got a book, Conceptual Selling, and it shaped me in the right frame of mind on just how to go about getting in touch with people, right? And understanding them, not just selling, right? But understanding people and figuring out what they're doing, right?
Right. And that actually leads me to my next question, which you might have just answered, but if not, we'll take another one.
Uh,
Um, Readers or leaders, that's for sure. Leaders or readers, whatever the heck that is. What is one book every entrepreneur should read or every person on this
yeah, the
call?
one I just mentioned, I
What
thought
is
it was
it? Conceptual selling?
that one's a good one too. I don't know that that's even around anymore, but I thought that was I think any book and any good book with a good author on selling. Some of Buffett's books are good. Yeah, I mean, I'll be honest with you. I don't read as many books as I should. It's more it's more documents. It's more online. It's just more everything revolving around demographics, deals, analyst reports. It's just everything else,
Well, you
right?
mentioned Art of the Deal, so that's a damn good book, which
It's a
probably
good
most
it's a
people
good
haven't
book.
read.
Yeah. I mean, whether you're Democrat or Republican, I personally don't think that makes a difference,
Yep.
but some it will.
Yeah.
But I thought it was a very good book. So
All
There's
right,
a
here's
lot.
another one. This is always an interesting question for people. What's one piece of advice you'd give your younger self?
Stay more patient for sure. I definitely would say that I'm definitely too impatient. And a lot of things I've been taught early on, thank God. But I would just say stay patient, and don't give up. I remember when I quit Merrill Lynch because I hated cold calling. And this is when you could go through the Sears Tower when, before 9/11 and so forth. I was able to do this. I physically walked on every floor up to 92 where Solly was. And I applied to a lot of different companies there. And I went to different buildings. And so, I got rejected a ton. I think I put out 37 different letters for graduate school to be in the associates program on Wall Street, and B of A accepted me. So my point is, don't give up. Just keep going.
Yeah,
You're going to get rejected a ton,
yeah,
and it's okay.
yep. All right, guys, real quick, we still have some time here. If you have a question, raise your hand. I'll let you guys jump on. If you do have a question, if you want to ask Ray a question yourself, I would love that since we have some time here. I have other questions, but let me see if anybody wants to. Uh, inside of your um, the Zoom, it'll have the raise hand thing there. That way I can see who's actually, it'll pop on my screen who has a question. It says raise hand down at the bottom. But I did see Randall had a question right over there. He is. Randall, go ahead, unmute yourself, please. This is Randall Blast, Ray Moreland.
Hey, Randall,
Randall,
how are you?
Good. How you doing?
Good, doing well, thank
I
you.
threw this in the chat, but I'll read it to you. Just compare and contrast or give your thoughts on the investor's mindset, their logic versus their emotion in their decision making. So, for example, fear of missing out is an
Yeah,
emotional
yeah.
reaction, but the numbers are logic. And which do you think is more important? Obviously, they're both important,
Yeah, I
but
think a FOMO is a big thing, right? I
yeah,
mean, I think that in anything, right? But I think the patience is a virtue. I think stick with your modeling. Too many people get emotional about too many different things. And you really have to stay calm. And it has to work from a financial standpoint, from a number standpoint. So the analytical part of me would take over way more than the FOMO part. And if it makes sense. So it's more the analytical side of the brain than the oh, I gotta do this. Oh, I see industrials doing well in Punta Gorda. I gotta get over there. I gotta get over there. Well, you're probably in the seventh inning if if it's already doing well, right? So really stay patient, but it's more the analytical side of just looking at different deals and different demographics, different areas, and if that makes sense. I don't know if I hopefully answered your question a little bit. I love the view, by the way.
no, thanks.
Yeah.
That's Hutchinson Island, Stewart.
Oh my gosh, it's
Yeah.
beautiful. Shows there now.
me too.
Me too.
Tim, I see you have a question.
Hi, Tim.
Yeah. Hey, Ray, how you doing?
Good. How are you?
Great, great. Yeah, I appreciate you coming. I appreciate
Oh,
your
of
time.
course.
Very
Of
insightful,
course.
good information.
Yeah, hopefully it helps.
It does definitely. So I'm in Kansas City, Missouri, and I'm a multifamily founder.
Good for you.
And it's one of the things that I struggle with. I've been looking in markets. It's obvious that markets like South Florida, maybe the Dallas Fort Worth, or maybe some places in North Carolina, they kind of those areas kind of speak
Yeah,
for themselves in the
the
market.
triad.
But
Yeah.
yeah. And so, but I'm looking at a deal right now that's in a more tertiary market in Missouri.
Hmm.
And so one of the things I struggle with is what to focus on when you go to investors. Would it be really focusing on the returns, if they're really good returns? Is it more about telling the story of the market since a lot of people may not be as familiar with it? Or
Yeah,
maybe the GP team and the experience, or is it a combination of all those?
I think it's a combination of all of it. And I like Kansas City for multifamily. I used to go there twice a year with some of the accounts I covered, but yeah, I think it's a combination. I think having having a good story to tell, and you know this, what separates you from the other guys, sponsors, GPs that are going to be pitching them, what separates you from the other people? Like you're selling this multifamily, this plot of land. Well, is it on a good street? Is it, what characteristics make that where they should kind of take a second look, right? Because everybody's busy and so forth. That's what I would, if I was going to do that from a multifamily. I'm not, multifamily is not up my alley as much, but if I was going to do that, I would say, well, what separates your idea from the other ones that I already have, or maybe I've looked at and so forth. Like for instance, Arkansas, close to where Walmart's at. That area is blowing up out by I forgot that area.
Bentonville,
Yeah, that whole
Rogers.
area, like up in Ohio, Columbus area, Cleveland area, Oklahoma City area. I mean, there's some pockets there that are sneaky, actually, I think really good. I don't have the bandwidth or the time right now to look at that stuff, but from everyone I've talked to and different people, I would maybe take a look at some of those areas. Also, Tuscaloosa, Alabama. Um, any area with big colleges that, I think is ripe if it's right. I mean, if the cap rates are right, if the prices are right. My hunch is some of these have started to get inflated a little bit, but you can find them. You
Yeah.
know, Des Moines, Iowa might be another
I was
area.
just gonna, I was just gonna ask about that. So Des Moines
Yeah,
is one of
yeah,
the ones, it's not very far from Kansas City, and that's one of the ones that I've been focusing on a little
yeah,
bit. And I see some of the same, it's really a growing place right now. And there's
for
what's
sure.
coming there is actually pretty amazing with all the data centers and that kind of thing. And
Absolutely.
and and then Columbia, Missouri is the place where I'm looking at a deal right now. I
Yeah.
mean, big college town, but it's actually one of the best markets in Missouri, but
Yeah,
hardly anybody knows that.
I would also look at South Carolina outside the Columbia
Yeah.
over to Charleston. That is the one of the data centers of areas of the country. That whole area. I mean, there's several. There's like three or four of them now. It seems like, but yeah. I mean, Des Moines. I'd love that. Denver's overdone. Boulder's overdone. Uh, yeah, I think those are. I think all those are a good start. If it was me, but
Love it.
Thank you.
Real quick, Randall put something in the chat, and Randall, I would ask if you would take 2 minutes, if you don't mind, to throw that into the wealth circle in the book recommendation section. I haven't read that. I'm going to read that, but he put a book in there, Building a Story Brand by Donald Miller. I'm going to read that one. So I
yeah.
appreciate that. Thank you. Let me see what else we got here. Someone put in here, this is a little long, but I'm going to try to read it. When recognizing alignment and addressing investors' potential headaches in their own day-to-day, is it advantageous to propose that the solution to their headaches may be found in my project, or perhaps water the seed and allow them to make the conclusion themselves? I don't know if that was a little overdone of a question.
I'm
Did you
trying
get
to
that one?
unpack. I'm trying to unpack that
Me
question.
too, a little bit. If you could actually, whoever wrote that, it's on the iPhone, send that question in a little bit easier if you would.
Maybe he or she is alluding to if a deal is not getting off the ground, or they're not getting the feedback that they want. How should you be looking at that? Well, I mean, if that's the question, I think it may be some part. I would go back and look at your story, look at who you're trying to talk to, who you're communicating with, and maybe try something different. If it's not connecting, call an audible. Football's almost here, so I had to throw that in there. So maybe look at, and then again, if all these clients, LPs, potential LPs, investors, whatever, if they're shunning the project, maybe it's the project
Yeah.
too. I mean, I don't, maybe it's the numbers. Maybe
Or
they
the
look at the
structure.
there's
Right.
yeah, there's so many
There's a lot.
different
There
variables.
is.
Everybody's so busy. That's the thing. You have to get someone's attention, right? And it is very difficult. Raising money now is so difficult. I mean, from the, from the other side of the PE world of rolling up companies, right? It's extremely, and Blackstone, all these guys come out with these articles all the time about it. Yes, they don't have problems raising money, but there's some good articles written out there how difficult it is to raise money in the PE space right
Yep.
now.
Well, especially if you don't have the right strategies or structure. I want to actually
Yeah,
real quick, I want to brag on some people on this in this room because we have some incredible people.
yeah, for
There's a
sure.
woman in here named Kayana is in here. She's a 2-time Emmy Award film producer, which is pretty freaking awesome.
Good
So
Lord,
how cool
congrats
is
on
that, right?
that.
She's raising capital for her next film. She's got a lot of traction going on. So that's super cool.
I have a few people in the film industry that are friends of mine that maybe at some point we can connect with.
Love that.
Yeah.
Love that. I got Thomas here. He's in the west coast of Florida. Thomas, he's a big developer. He's done thousands and thousands of projects. He's raised a lot of money. So
Awesome.
he's someone too that is just really cool. There's so many. Everyone, I can literally brag
Yeah,
on
it's
everyone
awesome.
here.
That's a
But we
great
have some,
group.
yeah, we're pretty,
Great
pretty
group.
blessed with some great people here.
Yeah, no,
Um,
absolutely.
Oscar just joined us a few weeks back, I think a month or so ago. He has a question in here. He's also in real estate, different side of the real estate, not multifamily or anything like that. Um, but Kevin, thank you. I appreciate that. By the way, Kevin, good to see you again, man. I haven't seen you in a few weeks, so nice to see you, your face, and hope your wife's doing well as well. Um, Oscar had a question. As an investor, if a project gets delayed due to county or permitting issues,
Mhm,
which then will impact the expected
mhm,
ROI. What
mhm.
would you expect the founder to communicate? Like, how can the founder communicate that to their current investors? Is that what you're asking there, Oscar? The current investors? Um, o-
Yes.
okay.
What I
And
would, oh,
go ahead.
sorry, go ahead.
Go ahead, Ray.
No, no,
I'll
no,
get a
no,
second.
no, 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 no. Go ahead, go ahead.
He said, and then from the founder side, from his side, what strategies would you use to keep your investors informed and confident during those delays?
Yeah. I would have first managed expectations ahead of time. So if you know that that state county is in a delay process, you always build out in your model a little slack, right, for a delay. So and I understand the question, but going backwards, starting from zero, um, I would always build in the model. If someone says it's going to take 12 months to 16 months, it's probably more 16 to 24. So generally, not all the time, but especially from commercial real estate ground up, right? Because there's a lot of things that have to happen. So I would first try to understand, well, from all these county officials, how long is it going to take? And then add another 6 months. So I would communicate that ahead of time. Now, since it's already done, it is what it is. You have to properly communicate that to the investors. We didn't foresee this happening. I wouldn't necessarily. I would not pass the buck because at the end of the day, you're the GP. It's your deal. You're responsible for everything that gets delayed and goes on. So you've got to take responsibility for that. I apologize. I didn't foresee that. We should have foreseen that. I know it's hard to do, but that shows actually to an LP. If I have money invested with you and you're upfront and honest about that without just fully blaming the county, which is easy to do. But to be perfectly honest with you, maybe that research and all of that due diligence could have possibly been handled ahead of time to understand what the delays on past projects have been. I mean, the other past projects, when you're grounding up, let's say, well, it doesn't make a difference. If you're in there, you should be talking to the county, talking to all their reps, talking to the main people that pull the trigger, but ask them before anything happens, ask them, what kind of delays have you experienced lately with this specific product? Are you having current delays right now? Maybe it is an unforeseen. If it's unforeseen, then it's nothing anybody can do about it. But take ownership of it and move forward, right? Yeah, it affects IRR. I think IRR is such a, you know how I feel about IRR, but I think it can be manipulated in so many different ways. especially levered IRR. Don't get me started on that one. Yeah, take ownership of it. But a lot of that starts in the very beginning in the due diligence phase is understanding how long it does take in the current projects that are involved right now. How long is it actually taking? I mean, talk to them, go take them to lunch, whatever the case may be. Figure all that out ahead of time so you can mitigate that or try to. Hopefully that doesn't happen. Sometimes it does happen, but take ownership and move forward.
I appreciate it, Ray.
Yeah, no
Thank you
problem.
so much.
Mhm.
Thank you. Very helpful.
Hey, Oscar, we spoke about this briefly, and thank you, Ray. But for everyone else on the call as well, the biggest problem when it comes to raising capital, I'm going to give you a story real quick too, is that when things go wrong, people get silent. And that's when investors get pissed when you go silent, right? So, a story for you. I invested in a deal a few years back. It was $250,000 that I invested in. It was a sort of a startup. These two gentlemen created a hedge fund, and they had some very proprietary software. The one main person that was involved was one of the original guys in Facebook, and also then went on to be one of the original guys in WeWork. So he went through the going public with Facebook, and he was going through the going public with WeWork when they didn't end up going public. But super smart, right? And very intellectual and has a great track record. Another guy was a similar person, and they had some quants involved. It was a very well-established thing that was happening. And I believed in it, and I liked it. Put my money in it, and so did multiple other people. Now, through the whole years that went by as things were moving, they were super transparent and very communicative. Every quarter, we would get updates, sometimes in between. There was always updates. We always heard from these people, right? Now, things started going wrong. There were some issues that were happening. The company ended up going completely out. I lost all of the $250,000, and then I get a return from it, right? Now, if they would have went silent through that process or through the entire process and I didn't hear from them or the other investors, everyone would have been completely pissed off and probably suing the shit out of those people, right? Because that's what would happen. Where'd the money go? What happened? But they were so communicative throughout the entire process. We always knew what happened. They would have us on calls as well when they needed to do a call, updating us on what was happening, that when it was like the last straw and things were going out, although it sucks completely, don't get me wrong, no one was mad because an investor understands the risk they're taking when they're putting the money in. It's a risk. No matter what, there's risk to any investment. So over communicate everything. That's what I've learned. When you over communicate things, things become normal and people trust you more. When there's no communication and when things go wrong, most people back off and stop communicating. That's when shit goes wrong for everyone, excuse my language. Okay. So now look, I take that loss and write it off. Ray has a very experience recently, very similar on the other side. He put in money into a deal, if you don't mind me saying this, Ray, but he put in a lot of money, over $500,000 into a deal, and the individual was not communicating whatsoever. Ray's asking for updates, financials, nothing. He gets nothing. And that deal ends up going south. And guess where his mind is at right now? It's very different than mine. It still sucks. Both of us, it sucks. But it's a very different. I'm not mad at these founders. I think they're great people. Just a deal went wrong. Where Ray's looking at it going, he's pissed off because they weren't communicative. They ended up doing some shady stuff. And he's going to probably be in lawsuits with them because of it, or should be, right? At some point. Very different ways of approaching, and it's all communication, Oscar. So you have to over communicate, good and bad. Okay, always give them good, and then when you are communicating anything bad that's happening, give them a little slice of good as well. There's always a silver lining in everything, right? Give them that as well. So hope that answers or makes sense. Let me see if we have any other questions. I don't think we do, Ray.
Remember what I said about making mistakes and learning from them? I learn more from the mistakes than I do than any successes.
Yeah.
It is what it is. You're going to cause me to drink, by the way, but that's okay. I'm kidding. It's too early.
All right, Ray, thanks for your time, man. I appreciate you very much. I love you, bro.
Absolutely. Love you, brother. Have fun.
Thanks
Thank
for everything you do.
everyone for having me. It's been great. And
hope this helped, guys.
Keep going. Yeah.
And
Keep
gals.
going and just keep going. And we appreciate it. I appreciate it. So
same here. Appreciate y'all. We'll see you in the Well Circle. If you have any more questions for Ray, throw them inside the Well Circle. I'll make sure they get answered. And we'll go from there. And I'll see everybody here on Tuesday for our call. It's week 5. It's about data rooms. It's about more communication, DMs, things like that. So I'll see y'all on Tuesday at 11:30 Eastern. Look forward to it. Thanks,
right.
everybody.
Thank you.